Welcome to Askprep, your trusted companion for UPSC and IAS preparation. Today, we will delve into a vital topic in general knowledge, which is the Reserve Bank of India, RBI. We will discuss its function and role. Understanding the RBI is crucial for comprehending India's financial and economic framework, as well as its role in ensuring monetary stability, promoting growth, and driving financial inclusion. This knowledge is essential for every UPSC and IAS aspirant. So, without further delay, let's get started. Introduction: The Reserve Bank of India, RBI, is the central bank and regulatory authority for India's monetary and banking systems. Established on 1 April 1935, under the Reserve Bank of India Act, 1934, the RBI is headquartered in Mumbai and plays a crucial role in shaping the Indian economy. As the apex financial institution, its primary objectives include maintaining monetary stability, managing currency, and ensuring the sound functioning of the banking sector. The RBI acts as the backbone of India's financial system, balancing growth and economic stability while adapting to the country's evolving economic needs. Functions of the RBI: Monetary Authority. The RBI formulates and implements monetary policy to control inflation, stabilize the currency, and promote economic growth. Tools such as repo rate, reverse repo rate, and cash reserve ratio, CRR, are used for this purpose. Issuer of currency. The RBI has the sole authority to issue currency notes in India, except for 1 rupee notes and coins, which are issued by the Government of India. It ensures an adequate supply of currency while maintaining its quality and security features. Regulator of bank. The RBI regulates and supervises commercial banks, cooperative banks, and financial institutions. It ensures the financial soundness of banks and protects depositors' interests. Manager of foreign exchange. The RBI manages India's foreign exchange reserves and ensures stability in the forex market. It administers the Foreign Exchange Management Act, FEMA, to facilitate external trade and payments. Developmental role. It supports the development of agriculture, small-scale industries, and rural sectors by providing credit facilities and setting up institutions like NABARD. Banker to the government. The RBI acts as a banker, debt manager, and advisor to the central and state governments. It manages public debt and facilitates government borrowings through the issuance of bonds and securities. Banker to banks. The RBI provides short-term loans to banks and maintains accounts of all commercial banks. It acts as the lender of last resort in times of financial crisis. Financial inclusion and consumer protection. The RBI promotes financial literacy, ensures access to banking services for all, and resolves grievances of bank customers. Role of RBI in the Indian economy: maintaining price stability. The primary goal of the RBI is to ensure that prices in the economy remain stable. Price stability means controlling inflation, rise in prices, and deflation, fall in prices, so that the economy can function smoothly. How the RBI controls inflation and deflation. The RBI uses monetary policy tools, such as the repo rate and reverse repo rate, to influence money supply and demand. Inflation. When inflation is high, the RBI increases the repo rate, the rate at which it lends to banks. This makes borrowing expensive, reduces money supply, and helps curb inflation. Deflation. During deflation, the RBI reduces the repo rate, making loans cheaper to encourage spending and investment, thus stimulating demand. The RBI also monitors and adjusts cash reserve ratio, CRR, and statutory liquidity ratio, SLR, to ensure optimal liquidity in the banking system. Impact. Price stability helps households maintain purchasing power. It fosters an environment where businesses can plan investments without worrying about volatile prices. Promoting economic growth. While controlling inflation, the RBI also ensures that the economy grows sustainably. How the RBI promotes growth. Encouraging credit flow. The RBI incentivizes banks to lend more to sectors critical for economic development, such as infrastructure, agriculture, and MSMEs. Lowering interest rates. During economic slowdowns, the RBI reduces interest rates to make borrowing cheaper, encouraging businesses to invest and consumers to spend. Priority sector lending, PSL. The RBI mandates banks to allocate a certain percentage of their loans to priority sectors like education, housing, and rural development to support inclusive growth. Impact: promotes industrial growth, job creation, and increased production in agriculture and manufacturing. Facilitates long-term development by supporting infrastructure and innovation. Safeguarding financial stability, to ensure the soundness of the financial system and prevent disruptions like banking failures or financial crises. How the RBI ensures stability: regulating banks. The RBI monitors the operations of commercial banks and financial institutions to ensure compliance with laws and safeguard depositors' money. Capital adequacy requirements *. The RBI mandates banks to maintain sufficient capital to absorb potential losses, ensuring their stability. Lender of last resort. In times of crisis, the RBI provides emergency funding to banks and financial institutions to maintain liquidity and prevent collapse. Monitoring systemic risks. The RBI identifies and mitigates risks that could impact the entire financial system, such as rising NPAs, non-performing assets, or market volatility. Impact: protects the interests of depositors and investors. Prevents economic disruptions caused by financial crisis. Encouraging innovation, to drive modernization and financial inclusion by promoting new technologies and systems in the financial sector. How the RBI encourages innovation. Digital payment systems. The RBI has been instrumental in developing platforms like Unified Payments Interface, UPI, Bharat QR, and Immediate Payment Service, IMPS, which have revolutionized digital transactions in India. Fintech and startups *. The RBI supports the growth of fintech companies by creating a regulatory sandbox, allowing them to test innovative financial products in a controlled environment. Fintech and startups. The RBI supports the growth of fintech companies by creating a regulatory sandbox, allowing them to test innovative financial products in a controlled environment. Central Bank Digital Currency, CBDC. The RBI is piloting the introduction of a digital rupee to improve payment efficiency and reduce dependency on cash. Financial inclusion programs. Initiatives like Jan Dhan Yojana, in collaboration with the government, aim to bring the unbanked population into the formal financial system. Impact: digital platforms reduce transaction costs, improve transparency, and make financial services accessible to rural and urban populations alike. Encourages the adoption of cashless transactions, fostering economic growth and reducing the risks associated with a cash-dependent economy. RBI's role during demonetization, 2016. One of the most defining moments in the RBI's role was its involvement in the demonetization of 500 rupees and 1000 rupee notes in 2016. Key objectives: eliminate black money, curb counterfeit currency, promote digital payments and reduce dependency on cash. RBI's role: implemented the demonetization policy in coordination with the government. Issued guidelines for the exchange and deposit of old currency. Managed the printing and circulation of new currency notes, 500 rupees and 2000 rupees. Ensured liquidity to minimize disruptions to the economy. While demonetization faced challenges, it highlighted the RBI's ability to execute large-scale financial operations and align its actions with national goals. Former RBI governors, C.D. Deshmukh, 1943 to 1949, the first Indian to become RBI governor. Dr. Manmohan Singh, 1982 to 1985, later became the Prime Minister of India. Bimal Jalan, 1997 to 2003, focused on economic liberalization. Raghuram Rajan, 2013 to 2016, known for his warnings about global economic risks and reforms in the Indian banking sector. Urjit Patel, 2016 to 2018, served during the demonetization period and emphasized inflation targeting. Shaktikanta Das, 2018 to 2024, recognized for his significant contributions to India's economic policy and financial stability. The current governor, Sanjay Malhotra, from 12th December 2024, continues to guide the RBI in addressing contemporary economic challenges like inflation, digital currency, and financial inclusion. In conclusion, understanding the Reserve Bank of India RBI, is crucial for grasping India's economic governance and its role in monetary stability and financial inclusion. For UPSC aspirants, the RBI is a key topic in the economy and governance syllabus, with frequent questions in both prelims and mains exams. A solid understanding of the RBI aids in answering questions effectively and provides valuable insights into India's financial system and its impact on the economy. At Askprep, we aim to bring such insights to help you prepare better for your UPSC and IAS examinations. Thank you. This is Askprep, your guide to mastering UPSC and IAS preparation. Let's decode complex topics and simplify your journey to success.